this trading week is going to be insane. You have Microsoft that reports earnings on Tuesday. You get earnings from Tesla on Wednesday. You get a lot of economic data on Thursday and Friday, and all of this sets us up for Apple, Google, Amazon next week, as well as the Fed meeting. Now, here in this video, we're going to talk about what the actual expectations are for Tesla earnings, why Tesla could be poised for a big upside move after earnings, what's really important here, what is the market's concerned about when it comes down to Tesla, because after all, we already know what the delivery numbers were. The bigger question is, where are we going from here? What does demand look like for Teslas? If there's one thing and one thing only that is important to Tesla investors, if I were to ask you, what do you care most about when you're investing in Tesla? I am sure 99% of people would say deliveries, growing their delivery numbers. And that's what the stock is valued at. Right? It's not valued on a PE ratio that is cheap. It's all based on growth. So that's the big thing that we're going to talk about here in this video. We're kind of going to squash some concerns I feel like that are reasonable to squash heading into earnings, guys. And by no means am I a financial advisor. Do I have a crystal ball? All of this information will be public information that you guys can look at. We're talking Google Trends, the economic calendar, earnings. All of this is public information, so feel free to look it up and fact check anything that is said in this video. But we're not going to waste your time. If you learn anything, if you like these kind of videos, hit that like button and subscribe to the channel. It is free 99 after all. So Tesla, just generically where we currently sit, you have risen about 30% from the low at $101 and some change. I believe it's 101.81 was the low. You are at 133.80. So you have rallied quite a bit, but even from where we were in December, Tesla was dang near a $200 stock. So you have fallen a lot just in the month of December and the beginning part of January. You fell about 50%, which is huge. So to think you could see an upside move from here, I think makes a lot of sense. Now, if you guys have not seen the last video that I just put out, definitely go ahead and check that out. If you have not been a follower of this channel for a while now, then you wouldn't know this, but we've been calling for the 150 to 160 breakout level for a while. CNBC did just say the exact same price target, right? So I think a lot of people are in line with that level, that range, 150 to 160. Some people even calling for a move back to $200 to get all of those December losses back. Now, let's get into what we're expecting out of earnings. Now, like I said, the biggest thing is going to be growth, and growth going ahead, because we already know the delivery numbers for Q4. We know they were a record, even though they were not up to Wall Street's expectations, about 15,000 vehicles short. We still know it was a record, and we know it was before a lot of the price cuts. So we're expecting decent margins. I think Wall Street is expecting okay margins. They're the most profitable electric vehicle producer. That's a given fact. So comparing it to its peers, not even much comparison there. So we're expecting decent things out of Tesla numbers. Now, the real question and concern that investors have right now, and the whole reason why Tesla fell 50% in December to begin with, is what does demand look like? We're seeing a lot of demand destruction in a lot of different categories of the economy. Is it starting to hit vehicles? And vehicles tend to be one of the first things that goes when economic times are uncertain. Think about the '08 financial crisis. Think about any other crisis. Vehicle companies don't do so great, but Tesla is unique. Now, Tesla has been cutting prices, as you guys know. We're not going to go over that too much. We're just going to talk about after or since those price cuts, what the demand picture has looked like for Tesla. And it has been surprisingly very good, guys. So let's get into this. And I think this right here should make you more bullish than not heading into Tesla earnings. And this article says Tesla Model Y surges to second most searched vehicle after price cuts. And this is from Edmunds. And if we go ahead and take a look at this, it says auto research website Edmunds saw significant increases in research of Tesla vehicles, with the Model Y even becoming one of the top search vehicles on the platform. Quote, on-site shopper consideration of Tesla vehicle pages on Edmunds jumped to 4% of all research brands compared to 1.9% the week prior, Edmunds said in a statement on Thursday. Quote, the Tesla Model Y became the second most researched vehicle on Edmunds, behind the Honda CR-V, up from 70th place the week prior. That don't even sound right to even say. 70th place the week prior. So you went from 70th to second within a week after these price cuts. And I think it does have a lot to do with the fact that Tesla was already a relatively inexpensive vehicle. It's not super expensive. It's not like a Lucid. It's not like even a Rivian, right? It's pretty affordable. And then now you factor in that it's 2023 and you can get that $7,500 tax credit. It makes a lot of sense why the demand is spiking for Teslas, especially as they have cut prices about 20%. Now, Google Trends. This is a friend that I like to use all the time. It's very soft data, so it's nothing definitive, but you can narrow it down to see what, search trends look like for certain things. And I like to actually use this all the time, not just for Tesla, but for different things regarding investments. And when you look at Tesla, I have just Tesla, that's the blue line, and then I have the Model Y pulled up. And the Model Y is this red line. You can see from about January 1st through January 7th, roughly when the first price cuts were going into effect, this chart has absolutely ballooned, like much higher, both of these, much higher than what you've seen throughout all of 2022. All of 2022. There's really no comparison here, guys. Look, the proof is right here. People are at least searching Tesla more. I'm sure that does contribute into more sales. And like we got out of China, the insurance registration numbers were up 75% year over year that first week after the new year, or the first week of the new year for 2023. So you're seeing from a lot of different sources, like not one source, but multiple sources, that interest and it looks like demand is certainly picking up for Tesla. So let's go back to the whole question that I asked you in the beginning of this video. What do investors care about? It's the growth rate, because if Tesla grows at 10% in 2023, well, the stock is severely overvalued. If it grows at 50% or overvalued, if it grows at 50%, it's extremely undervalued. So what does the company say on earnings? Do they say demand has picked up in a huge way? Like there's so much demand after these price cuts that we might get 60% delivery growth, or even just reiterate 50%. Right now, based off the 50% decline we've seen in December, the share price of Tesla is not actively pricing in a 50% delivery growth rate in 2023. It's more like 35%, maybe 40%, depending on which multiples you're giving Tesla. So it looks like we're probably going to get some positive things said on Tesla's earnings, and specifically with Tesla's earnings call. Now, the other important factor is going to be margins, and that's a tricky one because obviously they're cutting prices on their vehicles, so margins are probably going to go down. They're instinctively really going to have to go down. To what extent? That's going to be the big question. And does the production volume increase from cutting prices make up for that lost margin? That's a big question. But at the same time, what if their actual contracts for raw materials are getting cheaper? What if there is some surprises on the solar side of the business as well? I think those are things that when I factor it all together, it's hard to make a bearish case on Tesla, especially considering the stock is so low. Now, if the stock was 200 or 300 or even like 180, I mean, then you could make a more logical argument to why Tesla is going to have a rocky earnings season. But considering everything you just heard, I think it's safe to say the stock's probably going to rally after earnings. But hey, that's just one guy's opinion. The technicals also look very, very bullish. Just a simple downtrending line will show you that you have broken out, kind of reset a trend. And in simple terms, that just means the bounce has lasted a little bit longer than it should have if you were in this never-ending downtrend. It looks like you have some momentum to the upside, especially the over 5% move that you did see on Friday. And 130 was really a big resistance level, and you smashed through that on Friday. So that is a positive thing as well heading into earnings. You're still looking at like record volume on Tesla for really months now. Like, it's been a long time where you're just seeing 150 to 200 million shares trading hands every single day. So I think that's going to make things a little bit more volatile heading into earnings, but nonetheless, a positive earnings after all. Now, let's get into the economic calendar. As well as that, we're going to look at some of the largest earnings that we're going to be getting this week. So as far as the economic calendar, guys, we're going to skip right to Thursday and Friday because we really don't have anything that is sufficient to the markets to give us a move, either to the upside or the downside. And I think the economic data is really the wild card out of all of this, because if you guys recall, throughout 2022, bad news tended to be good for the stock market. Well, what you've seen last week was bad news for the stock market. And that's because ultimately investors cared about the Fed raising rates in 2022 because it will lead us into an eventual recession. Well, now that the Fed is getting close to stopping raising rates and inflation is coming down, the worse economic data gets, the more fear you're going to see about that actual recession. So in other words, in 2022, we feared a recession. We feared what the Fed was doing could cause a recession. Now that you're actually getting data that looks recessionary, the markets are not playing along with that whole bad news is good news scenario for the stock market. Hopefully that makes some sense. If you were an investor in 2022, that makes perfect sense to you. Well, if you're a new investor in 2023, bad news is certainly bad news. Now, durable goods orders month over month for December comes out at 8:30 in the morning. The last month's reading was negative 2.1%. This month, we're expecting 2.2% of an increase. So that's a pretty drastic change from November to December. So if you get a number that's bad or just not quite 2.2%, then it's going to be a very negative thing. Durable goods orders obviously feeds into production and how much people are spending. So that's going to be big. You also get GDP growth rate advanced data for Q4. You're expecting 2.7% to the GDP rate. Last reading was 3.2%. I think this is also a big one because it's literally in the definition of a recession. If GDP does go down or not rise as much as people were expecting, something's wrong there in the economists' view of how we are getting these numbers. If economists expect one thing and the data comes out at another, that is showing you a disconnect. So that's the possible outcome that we could get this week from the GDP growth rate. Now, you will also be getting initial jobless claims for January 21st. You're expecting 202,000 initial jobless claims. Last week, we got initial jobless claims as well, came out at 190,000. The consensus view was 205,000. So we've had a pretty good history lately of having better than expected initial jobless claims. The markets, I don't think, are caring about this as much because, again, you know, bad news has started to be bad news. If inflation comes down and the labor market remains okay at the same time, I think the markets might become more comfortable with that. I think the Fed might actually become more comfortable with that if inflation continues to come down. So I don't think that's going to be as important. Now, on Friday, 8:30 in the morning, you're going to get core PCE price index month over month for December. This is the big one for the Fed. This is what the Fed watches very closely. You're expecting a positive 0.1% for the PCE index month over month. Last month was 0.2%. The consensus last month was 0.3%. So it did beat on expectations. It was better than expectations. We're expecting another decline for December. All the other inflation metrics have declined more than expectations, so I do think PC will also decline more than expectations, possibly even go into negative territory. That would be massively bullish for the stock market. And I think one that could go either way that is very interesting is going to be personal income month over month, also at 8:30 in the morning, and personal spending month over month for December as well, coming out at 8:30 in the morning. For personal income month over month, you're expecting 0.3% of a gain. Last month, you got a 0.4% gain. The consensus was for a 0.2% gain. So it came out well above consensus estimates last month, and you are expecting a little bit of a decline compared to November, right? In December, expecting a little bit of a decline. Now, if personal income goes up a lot, that's probably not going to be a good thing. At the same time, personal spending, you're expecting that to actually go into negative territory. So I think that is actually the bigger danger to the markets. If you get personal spending go down in a big way, I mean, you could see personal spending go down 0.5% or even 1% in negative territory. I think that would be a lot worse for the markets than seeing the personal income go up a little bit more, right? So I think personal spending is the one you want to watch the most, because if people stop spending money, that's recessionary. That's textbook recessionary. So if that happens, not going to be a good thing, guys. That is what you are setting up for as far as the economic calendar and the data that is coming out this week. As far as other earnings, feel free to go ahead and pause this video and take a look for yourself, or better yet, just go to Twitter and look up earnings whispers, and they will have this exact same picture for you guys. But on Tuesday, you got earnings from Microsoft, and then on Wednesday you have Tesla. Now, we're not going to run through all the earnings because they're right here in front of you, and that would just make this video egregiously long, and I don't want to do that. But what I will say is that the expectations for earnings, the actual numbers, are very high. You're expecting like 5% growth for 2023 earnings. If you start to see negative numbers, that's not going to be good. But the overall sentiment heading into earnings is not that great. So it kind of, in a weird way, sets you up for, hey, this isn't as bad as what we thought. Let's go ahead and buy these stocks. That's kind of the mentality that I could see play out with earnings, unless they are just really bad. If they're really bad and it's not in line with that 5% year over year growth that the markets are firmly expecting, that's going to be a super negative thing, guys. But that's all I have to say about that. On another note, DNB Asset Management materially increased investments in EV maker Tesla and Plug Power, a hydrogen fuel cell technology company, and they did buy about 600,000 bought 87,000 shares, bringing their total position in Tesla to about 617,000 shares, and they did sell GM, guys. So you're seeing some more investments into Tesla, which is definitely a positive thing compared to a negative thing. So I did want to put this here at the end of this video, guys. Nonetheless, let me know what you guys think about this information. Do you think this soft data about demand with Teslas is just BS? Do you think it's going to play a role in what the stock does? What are you looking at for Tesla? How are you trading this stock? What do you think about the markets? What do you guys think about Microsoft earnings or individual earnings? Let me know that information down below in the comment section. I do respond to every single comment, so make sure you guys give me your feedback. Thank you for watching. Most importantly, enjoy the rest of your Sunday night, and I will see you in the next one.